Welcome back to the video series 12 ways to pay zero tax on rental income. In the previous video, I gave you an overview of all the 12 ways and explained why the zero tax rules exist. In this video, I'm going to talk about the first way, and here it is. Income from boarders is exempt up to the amount of standard cost. If you meet the criteria, then this means not only do you not pay any tax on your income because it is exempt, you also do not need to file your tax return. This zero tax method applies when you rent out your home. You can use this method even if you are a tenant and do not own the property. Now let me break this down for you by first explaining two key terms, boarder and standard cost. The best way to understand boarder is by looking at how the IRD defines the term. A boarder or homestay student rents a room in a private home. They get meals and other care and services as part of their rent. They're different to flatmates. Standard cost is basically IRD's way of recognizing that you'll have costs in providing accommodation. Standard cost is the total of three parts. The first is a rate set by the IRD each year and is currently $231 per boarder up to a maximum of 4. This represents the direct day-to-day expenses involved in having boarders. Let's call this weekly standard costs. The second is costs of the boarder using your home. The costs vary based on your situation, taking into account either your rent if you're a tenant, or if you own the property, then costs such as mortgage interest, insurance, and rates. Let's call this annual housing standard costs. And the third represents your motor vehicle costs for providing transport to your boarder. This takes into account fuel, insurance, registration, WAF, repairs and maintenance. You can use the IRD kilometer rates or choose the actual vehicle costs. Let's call this annual transport standard costs. Now that you understand the terms, let's plug this into what I said earlier. Income from boarders is exempt up to the amount of standard cost. Let's bring this together further with an overly simplified example. So if you have 4 boarders throughout the year, that's 4 multiplied by 52 weeks in an year multiplied by the IRD rate, currently at $231. You get $48,000 of exempt income for the year. This is before taking into account annual housing costs and annual transport costs here. Now, a disclaimer, since this is generalized and broad-based information that I've given you, it's important for you to find out if you are eligible to use this method based on your situation. I'm going to give you free resources as guidance. The first is IRD's own online free calculator. Use it to easily work out if you're eligible to use this method. If you are eligible, then I've also included a second free resource. Use it to work out if you need to pay tax using the standard costs method. This is a brand new resource released by the IRD in June 2024 and is IRD's own worksheet for calculating standard costs for private boarding services. And number 3, if you're a nerd like me, then I have even more. As a third resource, I've included close to 50 pages of IRD's source material, which includes commonly asked Q&As, relevant fact sheets, and a decision-making flowchart. You can download all these free resources from the link below. In the next video, I'll be talking about online marketplaces such as Airbnb. I hope you found this video helpful. Thank you and see you next time.